Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Olympic Steel. Steel, you say? Sounds boring, right? Well, maybe not. Turns out even steel companies can have interesting stories to tell, especially when money is involved. We're going to look at how they're managing their debt and what it means for the future of the company. Think of it as peeking behind a curtain to see if this steel giant is truly as strong as it seems. So Olympic Steel just signed a deal, actually, an amendment to an existing deal that could have a big impact. It's called the Ninth Amendment to their loan agreement. Basically, they're changing the terms of their existing loan. The important thing here is that they've extended the maturity date, which is the date when they have to pay back the loan, all the way to April of 2030. That's a big deal because it gives them more time to pay off their debt. It's like hitting the snooze button on a really big bill. This isn't a brand new loan, it's actually a modification to a loan agreement they made back in December of 2017. Think of it as fine-tuning an engine rather than building a new one from scratch. This section basically says that what we just talked about in the previous section regarding the loan changes is important enough to mention again here. It reinforces that this new agreement creates a direct financial obligation for Olympic Steel. Now let's get to the actual amendment. You can find it as Exhibit 10.1 attached to this filing. It's the full legal document that lays out all the details of the agreement. It might seem dense and complicated, but it's where you'll find the specific terms and conditions we've been talking about. Okay, so what does all of this mean? Well, extending the maturity date of their loan gives Olympic Steel more financial flexibility. It buys them time to generate revenue and manage their cash flow. It also signals that the lenders, the banks that gave them the money in the first place, have confidence in the company's ability to repay the debt in the future. And there's always a but, it also means they'll likely be paying interest on that debt for a longer period. It's a balancing act between short-term relief and long-term costs. Now, let's talk about the broader picture here. Olympic Steel is operating in a cyclical industry. The demand for steel goes up and down depending on the overall economy. When the economy is booming, construction and manufacturing are strong and steel demand is high. But when the economy slows down, those sectors suffer and steel demand is high. But when the economy slows down, those sectors suffer and steel demand drops. Extending their loan maturity could be a strategic move to weather any potential economic downturns in the next few years. However, it is a double-edged sword because it adds uncertainty to the long term. If the economy hits a big downturn, will their situation improve in the future? And will they be able to pay it back, or will they need to do something drastic like sell off some of their holdings? Richard A. Manson, the Chief Financial Officer, signed off on this report. It's his job to make sure the company's finances are in order, and this loan amendment is a key part of that. Alright, let's zoom out and put everything into perspective. Olympic Steel is basically betting that they can continue to generate enough profit to cover their debt payments over the next 5 years. Extending their loan gives them some breathing room, but it doesn't eliminate the risk. They still need to execute their business strategy effectively, manage their costs, and adapt to changes in the market. On the one hand, this move provides financial stability and reduces short-term pressure. It allows them to invest in growth opportunities and potentially weather economic storms. On the other hand, it commits them to long-term debt obligations, which could become a burden if the steel market weakens or if the company faces unexpected challenges. For example, rising interest rates could make their debt more expensive, or increased competition could squeeze their profit margins. These are things that investors should keep in mind. In conclusion, Olympic Steel's decision to extend their loan maturity is a calculated gamble. It's a move that could pay off handsomely if they execute well, but it also carries risks that investors should be aware of. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into the world of corporate finance. Until next time.